In this video, I'll be testing one of the best 5-minute scalping strategies that I've come across. It was made by another YouTube trading channel and he claims it has up to a 90% win rate. So after showing you how the strategy works, I'll be backtesting it myself 100 times to see how true that win rate really is. Okay, let's jump into TradingView. So for this video, I'm going to be using the Forex pair Euro USD, and of course my time frame will be set to 5 minutes. There's only 2 indicators used in the strategy, which is quite nice as lots of accurate strategies rely on far more. Okay, our first indicator we need to add is called docking channels. So I'll head up to the indicator tab and add it to the chart. If you're following along, make sure you click on this one here under technical indicators and not community indicators. Next, let's add our second indicator, which is just an EMA indicator. So navigating to the indicators tab and searching for exponential moving average, and again, make sure you select this one under technical indicators. Now that our indicators are in place, we need to change some settings on them. Let's start with our first indicator, the docking channels. So double clicking on it and going to the style section, we can uncheck the basis option. Next, go to the input menu and change the length to 30, then click OK. Alright, perfect. Our docking channel indicator is ready to trade with. Now let's edit the settings on our EMA indicator. So double click on the EMA line and go into the input section, we can change the length from 9 to 200. Then click the style menu and change the EMA line so it's an easier color to see. I'm going to change it to yellow and increase its thickness. We're going to be using this 200 EMA indicator as a trend confirmation indicator on our trades, which means it's going to confirm that our first indicator is correct. Now that our setup is complete and ready to trade on, I'm going to take you through the rules for this strategy. So starting with long trades, we're only going to want to enter a long position if the following conditions are met. Firstly, we need the price action to touch or come very close to the lower channel line on the DC indicator. Secondly, we need our price action to change from red to green at the point it hits the lower channel line. This indicates a change in trend direction. The last condition is for the entire price action to be above the 200 EMA line while this is happening. If all 3 of our conditions have been met, then this is a good point to enter a long trade. Okay, let's enter the long trade by placing our buy order at the close of our trigger candlestick. Then move the stop loss down to the recent swing low, and finally move the take profit up to our target of 1.5 times the risk. And just like that, the price action hit our take profit, so this trade was successful. Just quickly, here's an example of a long trade that looks good but actually isn't. We see the price action come very close to the lower channel line. Also, the price action is above the 200 EMA line, which is good. But the price action hasn't changed from red to green, so there is no indication of a trend direction change. And here's one final example of a long entry. We see the price action touch the lower channel level, the price action has changed from red to green, and it's also above the 200 EMA line. Alright, now it is time for short trades. So for short trades, the rules are the opposite. Firstly, we need the price action to touch or come very close to the upper channel band on the DC indicator. Then we need the price action to change from green to red, which signals a change in the trend direction. And lastly, all of this has to be happening while the price action is below the 200 EMA line. So with all these conditions met, we can go ahead and place a sell order on the close of our trigger candlestick. The stop loss will be set at the recent swing high, and we will place our take profit target at 1.5 times the risk. And just like that, the price action has hit the take profit, so this trade was successful. Again, just quickly, here is an example of a short trade that looks good but is not quite right. We see the price action hit the upper channel band, which is good. We also see our price action change from red to green, but our final condition is not met because the price action went above the 200 EMA line right before and during our entry signal, so we won't be taking this trade. Okay, here is one final example of a short entry. The price action has hit the upper channel band and the bars turned from green to red, signaling a change in trend direction. And lastly, all of this is happening while the price action remains below the 200 EMA line. This means all our conditions are met and this is a good trade to sell short on. Alright, so that is how this strategy works. Now it's time for me to jump into the backtester to find the true results behind this strategy. Just quickly, while the time lapse of me gathering all 100 trades is playing, I'll just quickly mention the backtester I use. It's called Trader's Edge and it is by far the best backtester out there. You get to create comprehensive rundowns of your strategies by entering trades into the backtester. It will show stats like win rate, profit, consecutive wins, max drawdown, and so much more. I use it not only when creating these videos, but also during my personal trading time when I'm exploring new strategies by other creators and want to ensure the stats are good enough before I use the strategy with my own money. They actually offer a 7-day free trial with no commitment, so if after the 7 days you don't need it anymore, you can cancel at absolutely no cost. If you want to check it out, there is a link in the description. Alright, enough of me ranting, enjoy the time lapse. And just like that, 100 trades have been gathered, compiled, and are ready to be analysed. Now you can probably already see that our win rate is far from the claimed 90%, we actually only achieved a win rate of 64%. Now this isn't terrible, but it is far from the claimed 90%. We also managed to grow our account size by 220% across the 100 trades, which with an initial account size of $1,000 meant we made $2,200. Looking further into our stats, we see the profit factor we got was 2.67 and we had 5 consecutive wins against 3 consecutive losses. Now it's important to remember that backtest results differ and you may get a higher win rate closer to the 90% claimed win rate, or you may get a lower one, but I definitely didn't get anywhere near that high. Also, backtesting doesn't account for exchange fees, so the true profit will be slightly lower but nothing too significant. And as always, I like you guys to know about the trades done. So these trades were ones I found across about 2.5 months. I used 7 different Forex pairs and multiple crypto charts all on 5-minute time frames to get them. Now with all this information in mind, it's not actually a bad strategy at all. It has consistent gains and is quite simple to use. If you guys want to give it a go, remember to practice on a demo account with paper money first before trying it in live market conditions. Alright guys, that is it for this video. I hope you found value in it, and always if you have any questions, feel free to ask them in the comments below, and I'll see you in the next video.